Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on April the 1st, 2018. Happy Easter. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed higher. We'll discuss direction and why we think we could be pushing back to the upside if indicators continue to improve. Signals are mixed, however. Institutional sentiment is more bearish than bullish. NIMO looks like it's cycling up from a low. We've got mixed results from FANG last week. Breath is showing potential for a turn to the upside. We have the put-call ratio or fear indicators giving us more bullish indications than bearish at the present time. Currencies are basically in that range that we've seen between 88 and 91, moving slightly higher with the yen dropping last week. We do have bonds improving. Those do look better. AGG, IEF, and TLT all look more bullish than bearish, headed towards their overhead moving averages and resistance levels. The CRB index, as a result of the US dollars moving slightly higher last week, gave mixed results with gold flat, copper is fading, and West Texas crude is back to the top of its range at $66 a barrel. We'll discuss stocks in the sectors, moving off that extreme red that we saw to oranges, yellows, and greens. Consumer staples, utilities, and real estate were the strongest. We'll look for a follow through there. XLP-XLY ratio did pop on Thursday and flagged on Friday, so we'll watch for that to continue. If that were to continue higher, that would be bearish for stocks in the short term. International markets are showing a reflection of bullish strength as well. We'll look at these IBD 50 names in addition to some relative strength stocks that are on IBD's stocks trading at 52-week highs showing relative strength. And we'll also look at some XII names that are showing relative strength in the energy, oil and gas, and exploration industry groups. Additionally, we saw some names in the defense group for a second week looking pretty strong. Bukowski is showing 4 of 5 red with his CPI signal mixed green since March the 29th, which is bullish at 67%. He has 3 bearish patterns, 6 bullish patterns, and 218 patterns waiting for a breakout. That last number is something to consider. Reflecting on the spiders for a moment, we have a number of bullish and bearish things to consider. First off, if we draw some Fibonacci's, we do see price action stopped at the 382. We have the 50-period moving average overhead, which would be resistance once we come back up to that level. We have volume by price resistance right at this level. We can see where we ran into that on Friday. We did close off of the high of the day. Just at the end of the day, we did sell off a little bit back below that 263.60 level that we needed to get back above. And also, the cycle continues to push lower. Now, it could push into the green zone, a bit more extreme. We did see volume. However, because of a lot of other things, I'm looking for a short-term bounce, if nothing else, a dead cat bounce, which would lead to a potential lower high. Now, we have a lot of things to overcome over the next week, so we'll get into the details in a few minutes. But suffice to say that I think we could get at least up to 270, maybe 272, if these extremes do follow through coming into this first week of April, seasonality notwithstanding. NASDAQ did lead for the most part. We saw some strength in many of the big cap tech names bouncing on Friday. However, ARUN does give us a mixed picture with ARUN down, pegged at 96, and ARUN up, dropping to 52. If the latter continues lower, that would be a headwind for tech stocks in the short term after this tepid bounce, if you will, on Friday. Now, we got the 50-period moving average overhead as a target, but this is a bearish trend until we break back to the upside. So for indications right now, this looks more bearish than bullish in the short term leading into the first week of April. Therefore, we want to see the comp, which is more than just tech stocks. Obviously, it's more mixed and similar with the New York Stock Exchange Composite. The 60-minute chart is showing price action trying to break trend, draw a trend line through this area. We need to get above this 71.75 area, 71.50. For starters, price action is already above the 9 and 20. So we have a lot of work to do with MACD turning up, stochastic moving from the green zone, and tick cumulative turning to the upside on Friday. Following up with that chart of the 60-minute, here's the daily. We do have potential to move all the way back to the 50-period moving average as one extreme, or come down and test the 200. So we're right in the middle of this picture. Stochastic and RSI are more oversold, leading us to believe that we could see a push to the upside. If we see some value or bargain buyers at this level, perhaps we can move back to the 50. That's a big if as we start trading the month of April. The good thing is the VIX is reversing. This is the VIX 60-minute chart. And in the upper panel is S&P 500. You can see as we're moving lower, when it drops and turns red, however, this is bearish for VIX and bullish for equities, as you can see. So right now we are on a bearish signal for VIX and expect that to continue to drop, in which case we would have the S&P 500 and other indices potentially follow through to the upside. If we consult this chart of the VIX front month to the VIX or VXV 3-month futures, the volatility indexes, whenever this drops from the green zone, this is also bullish for equities. The last time we saw this extreme had to do with implosion of volatility ETNs that led to this extreme spike and extended period of fear in the markets and volatility, respectively. With this extreme, we did reverse off of lows. In previous occasions where we moved above 1, which is more normal, like we're seeing here presently, we've reversed. The red verticals align with areas where that extreme relates to the S&P 500 below. And you can see each case we did rally afterwards. Okay, so notwithstanding this extreme with that ETN that imploded, we did have an extreme slightly more than we've seen previously, but not out of the norm in terms of areas for seeking a reversal. So that's what we're looking for presently, is a reversal and a move back to the upside. Also considering that we have the 50-period moving average overhead as short-term resistance. VDOM was on the watch list last week, showing potential for follow-through this week as it broke higher on Friday, building something of a shallow pattern, right side of a cup, if you will. Look for it to flag. If we do on Monday, Tuesday, there's a potential trade here on a breakout into an area of no overhead supply. We have strength in this group, exploration and production. Watch for XLE to be strong Monday. Monitor the sectors first thing in the morning during the opening range. If XLE is showing strength, VDOM, Viper Energy will most likely continue higher. No Bollinger Bands are expanding, RSI is rising. Increasing volume, MACD above its signal line. Don't chase it, look for a flag, and use your trade of the day setup for entries, exits, and stops. Being it's Easter, I'm only going to cover a couple more of these, but look at the names that are on this list right here underneath the IBD 50. These relative strength names look very good, the ones with the asterisks in particular. Oil and gas and exploration look really good this week. Look for a follow-through, use your trade of the day setup for entry, exits, and stops. As we can see with stocks like CLR, which continue to show potential, more than likely this one's going to break out and follow through this week. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on April the 1st, 2018. Happy Easter, everyone. Get out there and enjoy your day. And Spend some time with your family. I'm going to do the same. We'll send out the watch list later tonight, right around 9 o'clock or so, and we'll talk to you early tomorrow morning, give you an idea of what we might be trading first thing in the morning after we watch the pre-market price action prior to the opening bell. We'll see you around 9:20 a.m. Take care and have a great weekend.